Welcome to this FinGraphs podcast on Dukascopy TV. Today we're going to speak about the cross-asset outlook and about the S&P 500, about the Euro US dollar, about Treasuries, as well as gold. To do so, we will use our fingraphs.com platform. On this mosaic, we have a look at these four instruments on a daily and on an hourly basis. We will focus on the daily here and then move to the specific items. So on the S&P 500 and on the euro, we believe we're still in a long-term uptrend and that we're currently in a consolidation range that at some point could resume its uptrend to the upside. We believe that could be over the next few weeks following a slight dip. If we look at Treasuries, we believe we're in a distribution zone or perhaps a consolidation zone. It's not clear yet, but for now we haven't broken below the support of our C corrective targets to the downside, which does mean that we cannot confirm a secular reversal yet. In gold, we are also in a consolidation to the downside. It is approaching and heading against support at the moment. We believe it should stabilize and that we could see a new uptrend materializing over the next few weeks. If we look at the individual instruments, first as the mini S&P future, we could see that on the weekly graph, so the perspective over the next few quarters, we're still in an uptrend. We're in a bit of an exaggeration, but we do believe that it can extend another 3 to 6 months and possibly up to 3,800 as showed on our impulsive targets to the upside. The risk index was overbought earlier this year, corrected down with markets and has since been repositioning to the upside. It's not yet overbought, which does mean that it can still extend higher before it is, and that there's still some upside potential on this weekly graph. If we look at the daily here, we can see the consolidation range, a first move down during September, then 2 retests up with slightly higher highs. We believe that there's probably another dip here over the next couple of weeks, perhaps into early mid-December, and then the uptrend resumes once more into the spring. And here the targets are towards 3,900 and 4,000, so we might make it up there over the next few months. Also, short term, we are in a bit of an exaggeration. The risk index is overbought, so that would justify a bit of retracement over the next few weeks. On the hourly graph, we saw a spike here on the Pfizer BioNTech vaccine announcement. We've since been consolidating at high levels. The move could still surprise to the upside over the next couple of days, but probably makes a top here with our risk index in the overbought zone and then corrects down for a week to 10 days into early mid-December. On the euro dollar, the long-term situation is slightly different as we had been in quite a linear downtrend between early 2018 and March this year, along with many cyclical assets. We've since bounced very strongly, again with many cyclical assets, and weekly graphs are showing that we may have the potential to move up towards the 127, 134 mark over the next few quarters. That would imply a break above the 2018 highs. Some cyclical assets, such as, for example, the MSCI China, are already above these levels and may be leading other cyclical instruments in this trend. The risk index also leaves a lot of leeway to the upside. It's in the middle of the range and not overbought yet. If we look at the daily graph, we're also in a consolidation here at high levels. It's still an uptrend. We still believe there's probably a slight dip here, probably towards the lower support levels here around 116 that were achieved over the last couple of months, and then a resume uptrend situation from early mid-December into early next year, and in first instance probably moving towards 121 and 122. The hourly graph probably still has a bit more to go here in terms of targets, and the risk index is not quite overbought, but we then expect some retracement probably into early mid-December with targets towards 117 and perhaps towards the previous lows around the previous support lows around 116. Looking at Treasuries, we still believe this is an uptrend on our weekly graph and probably into next spring. We were very overbought this summer and hence the current correction. But for now, this correction is still well above our corrective targets to the downside, which would act as a trigger if they were broken through for a strong reversal. We cannot confirm that yet. We had an intermediate low early October. We're seeing a bounce at the moment. We believe it could continue slightly longer, then retest down perhaps towards late December, perhaps early January, but probably remains in this range. And at some point towards late this year, early next year, gradually start to resume its uptrend. So yields may retest to the downside over the next couple of quarters. Shorter term, we see the rebound that has been materializing over the last week or so. It may have the strength to break above our corrective targets to the upside, probably extending then into early mid-December, and then we see another dip, as just mentioned, into later this year, and basically to create some kind of a high-level base to move higher thereafter. Finally, on gold, if we are still bullish on Treasuries, we're also bullish on gold, and it saw top and exaggerations this summer, where we've hence been consolidating. Impulsive targets to the upside had been met, but if we do calculate our extended targets, they could still lead us up to 2,200, maybe 2,400 into the spring. The risk index is still below the overbought zone, which does leave some leeway to achieve this further potential. Shorter term, on the medium term, we have been consolidating since August. We're slowly getting towards the support of the lower end of the support of our C corrective targets to the downside, around 1800. So we're around crucial support at the moment. We believe it will probably hold around these levels and gradually resume its uptrend from early mid-December into next year. Shorter term, the hourly graph is not quite there yet. There's still some downside potential below 1800, probably towards 1794, 1790, and the risk index is not quite there yet either. Possibly still descending for another week or so, so into that early December target, which we believe will also be by the dips on gold on this hourly and daily graph, and potentially synchronizing with a resume uptrend situation on the weekly chart. We thank you very much for your attention and wish you a very good week of trading.